Welcome to Morningstar. I'm Larissa, the editor. Joining me today is Kaustubh Belapurkar, the director of fund research. Thanks for being here, Kaustubh.
Thank you so much, Larissa.
Kaustubh, your fund research team comes out with two ratings, the star rating and the analyst rating. Could you explain the difference between the two so investors can get some clarity?
Sure. So I think it's very important to articulate the difference between these two ratings. So if you look at the star ratings, they're predominantly quantitative, backward-looking ratings on the historical performance of the manager's returns. The analyst ratings is a more forward-looking assessment of the manager on the way we expect the manager to perform on a long term going forward. So to put it simply, the star ratings are what we call an achievement test, and the analyst ratings would we call an aptitude test.
Okay. Morningstar is known for its qualitative ratings, which is fairly uncommon in India. So could you take us through the process which explains the fund manager, his team, the AMC in general?
Sure. So quantitative ratings per se have the inherent problem of being very backward looking. The problem with them is twofold. One is you don't know how and why the returns have been generated. And secondly, are they going to be sustainable going forward? And that's where really Morningstar comes in with their global philosophy of the 5 pillars, or what we call the 5 Ps, which are people, process, parent, performance, and price. Just talking a little more about these pillars. So the people pillar is really where we want to assess the pedigree of the manager, but just not that. Also look at the team that's supporting him in building up the portfolios. We look at the capacity of the manager, because clearly that's something that can be a concern if he's managing a lot of assets across diverse strategies. And obviously, the longevity of the team is important, because if you have a cohesive team that's working together, there's something going right with the investment process. If I move on to the process pillar, really, that's where we're trying to assess where is the strength of the asset manager in terms of actually coming out of the best investment ideas. What is the investment decision-making process, and how does that really flow into the portfolio construction? So that's another very crucial pillar for us to understand.
True.
The third one, and which is I think very uncommon in the Indian market, is the parent pillar, where we try to assess the asset manager on the right set of practices that they would be following. For instance, the fund manager compensation. What we really try to understand here is how the manager is being compensated in terms of fund performance. Is it based on short-term or long-term performance? What we would really like to see is long-term performance rather than short-term being awarded, because that's where then the manager's interests are aligned with that of the investor. We will also then look at other factors like, is the asset manager looking at gathering new assets or actually servicing the existing investors?
True.
That's some of the aspects that we would look at when we're looking at the parent rating.
So you also mentioned 2 other Ps, performance and price. So can you touch upon that too?
Sure. So performance, I think, is a screener that most people use in the industry, but unfortunately, it's a very myopic view that a lot of people tend to take. And I'll explain where I'm coming from. So typically, point-to-point short-term returns are what investors tend to look at and make their investments in funds. Like I highlighted earlier, this is something which may or may not always work, because what you really need to understand is how have these returns been delivered by the manager, and again, how sustainable are they going forward. You need to get down to a portfolio attribution of the performance to understand, is it coming from a few stocks, or is it actually a more diversified set of stocks and sectors that are delivering the returns. You would tend to look at the way the fund's performing across market cycles. You would want a fund that does reasonably well in both uptrending and a downtrending market.
True.
So that's really on the performance side, where there's a more deep dive into rather than just looking at the final output, which is the returns that people tend to look at. The price is again, the Indian market obviously, we see is priced at a slightly higher end as compared to the global peers. But even there are some distinctions between funds where the pricing could vary. So it's more of a hygiene factor right now in the Indian market to understand, because obviously a more expensive fund would, work to the disadvantage of investors. So that's another pillar that we would tend to look at closely.
Great. Thanks, Kaustubh. That was very detailed, but I'd like to know how an investor can use these ratings.
Sure. So I think an investor clearly needs to understand that these ratings are forward-looking and for a long-term investment horizon. Like we know that the equity markets and the debt markets would go through the ups and downs. Similarly, fund managers will have some low periods along with their up periods. So it's important to acknowledge that it's impossible for a manager to perform day in, day out and remain at the top all the time. There will be times when his calls may or may not go right. But how does he actually go ahead and course correct? That's important for us to understand, and that's really how we go ahead and assess managers. To give you an example of if he's invested in a stock or a sector which hasn't been doing so well because the market probably doesn't acknowledge the idea for the time being. Does he hold on to his, if he's got his, as long as he holds on to the stock, even if his investment thesis is still true, then that's something that we like in a portfolio manager. At the same time, if a stock runs up and the valuation looks very rich, he should have the self-discipline of pruning his exposure. And so that's something that we really need to look at when we are rating a manager. So in a similar fashion, the investor needs to understand that if we have a top-rated strategy, the fund could be underperforming for a short while, but as long as he's patient and he's invested in a good strategy, it is going to reap him benefits over the long term.
Okay, I get it, but it leads me to the next question. How often do you revisit the analyst rating that you give?
So we typically tend to look at least on an annual basis. Since it's a more qualitative, forward-looking assessment, we don't believe that anything would materially change over a one-year period. But that said, if there are some changes at, say for instance, the fund manager change happens, or a very key resource within the asset manager leaves, for instance, a CIO leaving, would be a trigger for us to go and meet the fund management team again to understand the way forward. The other triggers that could work for us are, for instance, if there's a major deviation in price in terms of performance, we would want to assess what's happening. I'm not saying that we would go ahead and change our rating, but yes, we'll be cognizant that we need to understand what's really resulting in a performance that's above or below the benchmark and the peer group.
Okay, great. Thanks. Kaustubh, thank you so much for your time. This is Larissa from Morningstar. Thank you for listening.